Let's go live to Peter Switzer now. He's the founder of the Switzer Report. He joins us live from Sydney. Pete, good to see you. We saw some jobs numbers yesterday. How closely will the RBA be looking at this?
Well, guys, the interesting thing is that the stock market kind of priced in the expectation that the Reserve Bank will cut interest rates as a consequence of those numbers. And if you want reinforcement for that, you saw the Aussie dollar this morning, it's 66.14 US cents. So that's kind of a reflection that the markets think a rate cut is coming. But when you delve into the numbers, you can see why the Reserve Bank may well hold fire. For example, employment was up 13,500, economists tipped 10,000, but within that number, 45,700 full-time jobs were created and part-time jobs fell by 37,000. So the fact you're creating full-time jobs, the Reserve Bank would like that. Over the past 3 months, 79,300 jobs have been created, and I think that's another thing that Reserve Bank would like. Unemployment did go from 5.1 to 5.3, and they wouldn't like that, and that's the reason why the markets have reacted negatively to the number. But the participation rate increased as well. And also, if you look at one thing that comes out of the job report is what's happening to average weekly wages and earnings. And that's gone up by 3.3%. And that's the fastest growth in 6.5 years. So the Reserve Bank would like that. So I think there's enough in there for the Reserve Bank to hold fire and keep watching the economy before they make a decision to cut again.
Pete, Australia getting its own NASDAQ index, what does that mean, and is it a good thing?
Yeah, I think it's a good thing. Look, I've got to say, guys, the NASDAQ will have the famous stocks that have come around the last few years, like Xero, WiseTech, Altium, Afterpay. These are, we call it the wax stocks. There's the FANG stocks in the US and the wax stocks here in Australia. What's good about it is, A, it will attract foreign money, and B, by putting them all together, it's more likely that, say, smaller investors will think about investing in these hitherto not really well-known stocks. Everyone knows Afterpay because of retail, but other companies might not be well-known. For example, if you're not in the small business space, you might not know much about Xero. From my point of view, the whole thought of this really makes me feel sick, because on my Sky Business program a couple of years ago, I tipped Xero at $14. It's now $87, and I didn't put my money where my mouth was. And also another one like Afterpay, tipped it on my program at $11. It's now $39, and I taught the founder of Afterpay, Anthony Eisen. So this makes me feel a little bit sick. But I think it's going to be very good for these companies in attracting capital, which the stock market is all about.
Well, as you say, Pete, you've been rich and you've been poor, and being rich is much more fun. Given that, how is your own personal barometer, the Peter Switzer level of optimism at the moment?
You know what, we actually have put a survey out amongst 3,000 of our subscribers to the Switzer Report, and I was actually quite surprised. The majority didn't think there'd be a recession coming. The majority thinks the markets goes up this year, and most think the economy is on the improve, and that kind of is what I'm seeing as well. The big curveball is coronavirus, its impact on China, and then its impact on the global economy, and particularly us, because we're so closely linked. But I'm still in the optimism camp. I interviewed Shane Oliver from AMP Capital yesterday. He also thinks that slow quarter in March could be a little bit negative, but he's expecting a rebound. I'm quite happy to keep running with that.
All right, Pete Switzer, have a good weekend. Talk to you soon.
Same to you guys.